place you can go, but you wanna forget about problems. But your words, yeah, shake me out, saying that good time. There's always a plan down at the saltwater rain. Down, someone rain. Down, someone down, someone rain. Down, someone. I'm eating mangoes down here with Django by the salty sea. Shoot the tequila down here with she likes company. I don't know how to be. Would I see what I'm saying? It's better if you down here where it's winter. Good morning. We'll get started here in just a few minutes. Take a moment to look over the notes, pre-market tips. A lot of stuff going on this morning. We'll talk about that and get some trades set up. With a map, someone's blue. With a map, turns blue. And we'll go fishing out there with Chris. It's got some stories to tell. Yeah, the strokes and he probably go deep, Charlie, man, we raising all we live. Now you feel down here, Sweater and Willis, right on. Ain't no they cousin, the kiss they ran. So, sing loud. There's a show, right? Ain't no cloud, sky. I'm living my days, either way. But I'm not just bush. You back so. Come on down here to the. I don't know how you should look, you see, you cold. Life is better, baby, down here where it's better. Rather stuck for the how are you? Ain't so glad it doesn't. You say, you say, hey, music loud. There's a shit. Right. Ain't no bad sky. I'm living my best song today. But I'm not to the blues. But I'm not to the blues. With that turns blue. Let me feel with that turns blue. All night. I watch you watch from the crazy man looking down the it doesn't use numbers or no big heads. It always just says down. But you may be thinking that I said just watch his hands fall. And if I had trouble to want, he said, hey then, breathe out. Oh, and it breathes. If there's nothing really, and it see all that before, and it was. You get to strength, concentrate through the door, times that go. If a hurricane doesn't leave you dead, it will make you strong. Don't try to explain it, just nod your head. Breathe in, breathe out. Wrong. And all right, we'll get started here in just about 2 minutes. Make sure we have our start times on. Yeah, you notice with the added market volatility, we were pretty close to some of the supply zones and some of the demand zones. Now, the zones we mark are zones that are created during the regular trading hours and on in the right location. Okay. So some of the major turning points that we're looking for are a little bit further away, as we also notice on the FX markets uh, that the zones are further away right now, meaning we're kind of in the middle of a bunch of potential whipsaw. Okay. And we'll talk about that once we get started here in about 2 minutes. Okay. And if you do have questions, comments, post them in the chat. We're happy to address those and looking forward to a good trading session. But it is a unique trading session as we saw things unfolding yesterday with extremely choppy range-bound markets. And we need to look at those events and see, what was the lead up to this? How do we protect ourselves, understanding what the market's doing ahead of time? Because everything's priced into the market ahead of time, so nothing's really that random when it comes to the banks and institutions having their hedge and orders placed. So, about a few seconds away. Love the questions and the comments. If you want to see more, just let us know. And we're off. All right. So let's get fired up. Good morning, everybody. Welcome to our live trading room. This is our Friday live stream session. We are broadcasting on the YouTube channel as well. And just as I was commenting a few seconds before this, if you have questions, comments, post them in the chat. We're happy to explain in great detail what we're looking at, how we're putting information together, uh, and going forward. Throughout this session, I was told we have a couple of giveaways for the Elite Trader Funding evaluation accounts. So if you, I'll explain that a little bit later. But if you want one of those evaluation accounts, no cost, just jump in, let us know in the chat, and I'll give you some instructions for that a little bit later. Okay, so as we jump in here, a lot of drama in the market, a lot of things going on, a lot of volatility. Okay.
We had the overnight drop with some of the war escalating, and now potentially the U.S. getting involved with some of that. We also have contract rollover. We got a lot of stuff going on, especially with the equity indexes. The crude oil, natural gas did have a huge, huge spike um, driven by the news. Okay, oil out of Iran and all that stuff. Uh, I'm not going to get too dramatic on that. I mean, we're all traders. We want to get in here and find a good trading opportunity. Okay. We're looking right now at the Lake Base group of candles on the crude oil. Uh, we do see that the Globex range was extremely wide. So when we have that wide Globex range, we're often looking for the bear trap or the bull trap, which are the zones outside the regular session or outside the Globex high and low. Okay. A lot of drama around this. As we can see, prices come back up into the origin of a move down, and we're looking for and just kind of waiting to see if there's going to be um, some sellers there. And as we need to stretch out the chart just a little bit more, I just want to realize or have you realize that we do have a zone here, and we also have our um, we're going to be watching for that open range candle. Okay. A lot of folks are going to be kind of really defensive. I mean, people's heads got spun around with the drop in the overnight. Okay. All right. So we have potentially the open range breakout. We still need a few more minutes for that first 5 minute candle to come into play. And natural gas has kind of settled down. Globex range is wide relative to the daily ATR. So again, we're looking for the bear trap or the bull trap strategy on natural gas and crude oil. S&P, all right, we just came up into a fair value gap area, 20-minute time frame. We are an outside day, meaning prices traded outside the prior range session. Outside days, you can be a little more aggressive. Um, we want to see where price is going to open. If it's going to open inside the prior session's range, then we'll expect the gap fill. If it opens outside, we're going to look for more of the gap and run. Okay. So when we measure and document the relationship with whether price is at the opening of the regular trading hours is inside or outside the prior session's range, if it's inside and not broken the prior session's range, very often we fill the gap the same trading day. Okay. Now, if we open inside but have traded outside of that prior session's range, okay, gaps fill a little less often, but a high probability to look for that gap fill. Now, I'm using the 5 p.m. close. So, as we're preparing and looking over at the markets, okay, we also see that the volume on the Dow 30 stocks is very light. Okay. For all the drama that's going on, it's very light. This, the light volume implies a lack of big banks and institutions stepping in and controlling the prices there. Okay. And we all know that between 8 a.m. and 11 a.m. Eastern is when the banks and institutions are completing the order flow for the stocks based on what you know, the the company's needs and wants for monies. Okay. Goldman Sachs trading down $9 on 12,000 shares. Okay. That's basically like somebody's margin call. Okay. That's not a lot of volume for being down that much. Okay. Now we are currently short, looking for a little more of a panic or a drop back down out of this area. but there is a real high probability we're going to go back up and fill at least a 5 p.m. close. Okay. The low volume tells us that the major participants are not involved in the markets right now, and they're waiting to see what's going on as well. Okay. All right, let's move on. In Q, kind of getting an idea. We have prep screen zones. Now, our prep screen zones are zones that are created during the regular trading hours. They're a little further away right now. Okay. Last night we had one right in the middle, and or actually right up here. Price did come down and fill that unfilled opening gap. So we're starting to eliminate, and we still have several unfilled opening gaps that generally fill in about 8 to 10 days after the gap has presented itself. Okay. If we do not fill the gap today, then we'll have another unfilled opening gap to the upside. Okay. Now, these are just reference places. We do have a prep screen zone down here. And if price does start selling off, these are the levels that I'm going to start looking for at that change in direction. Okay. Taking a quick look at the Dow. Dow on a larger time frame, again, unfilled opening gap. It did fill the one in overnight. So these areas, even though they're further away, can offer where we might see that bigger change in direction. Now, as price is moving through this, we'll watch the smaller time frames and find a way to splice in to that move back down to demand, okay, or up to supply. Remember, banks and institutions are waiting outside these ranges or outside where current price is, as they already have their hedge and management in place. So if price does start going down, we have a target that we're looking for, but we need a good solid setup in order to splice into that. Okay. It's a very methodic way of looking for ways to where the major potential turning points are and where we're going to look for a stronger rebound. Okay. Right now, it's just information on the chart, and we may need to create a path to get to that level. All right. Russell. Okay. Russell did also get fill one of the unfilled opening gaps from yesterday, and now we're looking for the next one down there about 2040. Okay. Now, these are where we're going to look for if price does sell off or another retaliation comes into play. Remember, we got a lot going on: Ukraine, Russia, Iran, Israel, all the drama going on in the U.S. with the civil unrest. It's just like way too much. Okay, and we're all in front of our computers looking to capitalize on that. So banks and institutions are most likely going to be a little more standoffish. Okay. Between 8 a.m. and 11 a.m., we'll see if the volume comes in to start to support these price moves. If it's a lack of volume, then price is going to fall or rally till it finds the volume. Okay. Let's see. Taking a quick look at some of the things outside the price chart. We have seen a nice rally on the dollar. Okay, dollar moving back up. On a higher time frame, the next level for the dollar was way back down at 96. There was really nothing in the way. So if the dollar continues to fall, we'll probably see the 10 and the 2-year yield doing the same thing. Okay. An important fact about using the dollar, the 10 and the 2-year yield, you can see that when they are correlated, the conditions for trading are a little bit more productive. Okay, a little easier. When not correlated, things are a little more uncertain. Okay, and it can give us clues as to when to wait or when to jump right in. Okay. Let's see. We got the Nasdaq pre-market indicator, and it is gapping down. But based on where the pre-market stocks are trading, should be a lot more. Nasdaq pre-market indicator, created by the Nasdaq exchange, actually was bought by the Nasdaq exchange from the uh, Philadelphia exchange back in the day. Uh, but the Nasdaq pre-market indicator is used by the exchange to understand traders' sentiment at the open. A gap up or a gap down helps them understand that traders are bullish or bearish based on the pre-market activity watching the Nasdaq 100 stocks. Okay. And we got a small gap down. Things are a little uncertain. Pre-market VIX. Okay. Pre-market VIX is gapping up over $2. Okay. Now that does imply that there's fear coming into the marketplace. Okay. Might be a little overdone at this point because we're not seeing such a strong gap down on the Nasdaq stocks. Okay. So keep in mind that the pre-market indicator has a 92% correlation as the trader's sentiment at the open. Okay. Yes, I did see that. If you are using TradeStation, uh, that brokerage, they have issued that the day trade margin rates are cut. And we also need to pay close attention to the exchange to see if the margin rates or overnight rates have been adjusted up or down. If the overnight margin rates have been adjusted up or down by the exchange, then we have to prepare for a lot of potential volatility. There'll be opportunities in that, but when the exchange adjusts margin rates higher, they are prepared and being defensive. They're not going to cover your trade, so they want more skin in the game. Okay. The trend, pre-market trend is low. Trend low, time to go. Trend high, time to buy. Okay. So we'll keep an eye on that as the session opens. We're still about 15 minutes away from that. The session open. Let me resize that. See, when we're doing a pre-market routine, we're gathering information. Okay. And as we're gathering that trade information, we want to understand the trading environment. Okay. And as we understand that trading environment over time, you start getting all these little data points to say, okay, this is a bullish day, this is a bearish day, this is a I have no idea day. Okay. And we're not using opinions, we're looking at specific pieces of information to help correlate a market direction or a potential trade. Okay. All right. So we do have crude oil coming right out of that zone. Beautiful. Okay. Now I didn't jump in on that. I was bummer. But you'll see that throughout the trading session today, that when we call a leg-based zone, this will mark the risk involved in taking the trade. Okay. A little late to get into it now. Going short. But the leg base group of candles, 87 out of 100 times, you'll get at least a one-to-one move out of that. Okay. Now today we had that price come up into it right around the pit open, and we're waiting for that. Okay. All right. A lot of volatility on nat gas. Nat gas on a daily chart also holding that 200, oh sorry, the 50 simple moving average. Okay. And nat gas did get a lot of volatility around the events that took place last night. Okay. This is our open range area. Okay. Another thing to note is that when you're looking down at the daily ATR, which was roughly about 17 cents, is you often see that the nat gas opens about that, or at the pit open is about 50% of that daily ATR. Okay. When that changes is generally around the contract rollover on Thursdays when we have a nat gas report coming out. Okay. Looks like we got a nice resistance area, accumulation of buy orders down below, and then we'll look for the potential break to the upside on this. Okay. Now this is our, yeah, let's set this one up. Actually, I'm gonna continue with getting a feel for the market right now. Okay. Gold continues to move up as traders start to speculate. We are seeing that a few more of these fair value gaps are coming into play. Okay, strong momentum. We're approaching the new highs. Now, we did have copper pulling back a little bit, but it didn't get quite into the demand zone. Okay. Silver moving up. We're up 3 pennies on silver. We're seeing where there was demand down below. Yeah, let's bring up copper. Yeah, copper is kind of all over the place. I did go out to larger time frames because the smaller time frames were just a lot of tails and whipsaw over the last couple of days. Okay. Now, when you start looking at the smaller time frames and you just can't make sense of them, you got to go back out to the large time frame. The events that led up to this, the market was pricing in a lot of this volatility. Okay, on the smaller time frames, several traders were probably getting whipsawed back and forth in some of their trading. Okay. So when you start to experience some of those whipsaws on the smaller time frames, step out to the larger time frame and kind of see where you're at. Okay. And we do have some trades potentially ready. British pound, if the dollar continues to move up, we'll look for the pound to come down back to demand. Um, Also, I just making comments about the small time frames have been very whipsaw, chaotic. Okay. So I did go to the larger time frame on some of the FX markets. FX markets are going to be greatly impacted by what the dollar and the 10 and the 2-year yield are doing, and they trade inverse of that. Okay. We in the overnight session we did have the 5, 10, 30-year bonds and notes come back up to a resistance and supply area, and have also pulled back. Okay. Our equity indexes also kind of between levels, okay, where we want to take action. So breaking down into the smaller time frames here, okay, this particular accumulation of orders, okay, after a strong move in price often leads to another strong drop, okay. Now we're looking to see if there's volume. Right now we got a lot more traded volume on the futures, basically because we got every day trader out there trying to get involved in doing something. Okay. But we do have to pay attention to what the large market cap weighted stocks are doing. Okay. The large market cap weighted stocks, why do we look at those? Well, the NASDAQ, the S&P, and the Russell are market capitalization weighted indexes, meaning the larger market cap stocks move the index more than the smaller market cap. Okay. Now we already saw that there was lighter than normal volume for these type of events. Okay. So the reaction around the open could be a lot more volatile for traders. Okay. The whipsaw. Okay. Everybody's kind of waiting and seeing, and when the waiting and seeing is in place, there's less trading, less volume. Also, think about the brokers that have and the exchanges, if they have increased the overnight and day trade margin rates, okay, making it where fewer traders can get involved, along with the light volume on the stocks, how do we anticipate the market will react? Okay. Well, with light volume, we get big price whips. Okay. Meaning that if we're going to be trading around the open, we have to be prepared for that. So always maintain your protective stop loss. Good morning, Andrew. Good to see you. Let's see. How's the news later going to affect the market? You trade the NQ. Okay. Great question. As we were watching and documenting these things, okay, we can also see that these are the large market cap weighted stocks. We see that where the volume is in the pre-market, we take measurements of this each and every day to see whether the volume is light, whether it's normal, or whether it's heavy. Okay. Light volume can imply a lot of the whipsaw conditions. Now, if we know the market's going to open up and things are going to be more whipsaw, then waiting, like Andrew pointed out, I got to wait and see. But tying that information to a trade application, okay? Know your trading style. Some people in the chaotic markets just make it work well, and some people just blow up accounts, okay? You have to learn your trading style. So we continue to collect a lot of pieces of information to help us understand that trading environment. And as we understand the trading environment better, we associate that environment with what we do as a trader. Okay. And if the conditions are whipsaw and choppy and that's not comfortable for you, okay, having a way to validate that with information and documentation says, okay, no problem. But if you don't have that documentation and just got a feeling for it, then trying to get in and out of those things can often be, well, very costly. Been there, done that. Okay. So Apple, unusually, I mean, for this type of move, 283 points down on the NASDAQ, Apple's actually holding out pretty good. Broadcom, Meta, Nvidia, Tesla, Amazon, Alphabet, and Microsoft all trading down. But again, we see this on lighter volume. Okay. So on this lighter volume, when that volume hits the floor in about 6 minutes, and we should have market open, we're getting a few of that coming in. I have found this site to be just absolutely amazing. Financial Juice. These are the market open or order imbalances, whether they have sell imbalances or buy imbalances. These things get updated as more information comes in. Okay. We can see the top sell imbalances, and we want to look through that to see what are the large market cap weighted stocks doing in that pre-market. We're still about 5 minutes away from the market open as these things come into play. Okay. Right now, the Dow and the S&P, oh, there we go. Okay, things are updating. We're seeing if there's larger sell imbalances or if there's more the buy imbalances coming in. Take note of the NASDAQ and the MAG 7. They're not showing as much of that. So kind of look at the volatility of the NASDAQ and the Magnificent Seven. Okay. Um, Take a good look at those and say, okay, well, they're not just dumping, okay, and they may be the Nasdaq and the Mag 7 may be a little more aggressive because that's where everybody's eyes are at, and the more conservative folks, S&P and the Dow, right now we're seeing there's more bearish um, sell orders for the opening of the session, okay. Now, we already, based on the information that we are collecting and putting together, oh, okay, yeah, the information we're collecting and putting together is that we have to anticipate that there's going to be some whipsaw price action, okay? And looks like we have another zone I didn't have marked right there. Okay. And we're seeing that price starting to move up a little bit on the NQ. And I'm watching the market open order imbalances right now. So there is a little bit of buying coming in. Okay. Maybe those traders anticipate the gap to fill. Okay. But all in all, that light volume in the pre-market is giving us some clues about this trading environment. Okay. Especially the overnight range as well. Okay. All right. Nat gas, chopping around, crude oil. Yeah, another great odds enhancer that we have, heating oil and gasoline tend to give a little indication of the direction of crude oil. In observation and our own documentation, we see that heating oil, gasoline move before the crude oil futures do. Okay. So we use the heating oil and gasoline as kind of an odds enhancer to find support to the move down or to move up on crude oil. Okay. All right. Just kind of looking at all the indexes together, we can see that Russell and the Dow tend to be more correlated. Let's see, we've got the S&P. I do favor a tick chart to see the volume versus a time base, but I go back and forth between them. We also have a downside breakaway gap, okay, on the exchange traded funds. Now, as futures traders, we understand that futures are derivatives. They follow the cash market. The stocks move, exchange traded funds second, and then the futures. And this is why when I'm watching momentum or things coming into the market, is we're using the stocks because they'll move first. The exchange traded fund will move second, and then we'll see the follow through on the futures. Okay. Always remember, futures never lead the market. They follow. That's why they're called derivatives. They derive their price from something else. Stocks. That's NASDAQ, S&P, and Russell are market capitalization weighted indexes, where the Dow is a price weighted index. With the Dow being a price weighted index, we can take an idea of what the Dow stocks are doing, give them a value of 2 points for every Dow stock that is greater than 94 cents negative or positive, kind of net those results. Right now we have 20 Dow stocks, 21 Dow stocks negative, one positive. Net results would be 20. Multiply that by 2, we get a value of cash relative to the futures. Okay. Cash equals -40. Futures are trading at -53. Futures are oversold relative to cash. Probably why we're getting that little bounce up. Okay. All right. All right. Market open. We're seeing that Apple and Nvidia, which are also the two largest market cap weighted stocks. Okay, they're going opposite directions right now. So there's no direction. Okay. Largest market cap weighted stocks, they do influence the way the market move. Okay. All right. It looks like this one is going against me. We are still in that area. We're getting a little bit of a squeeze. Okay, we're going too deep into that gap. I'm going to close this one up and wait for the next opportunity here.
Order filled.
Okay. Okay, see, and as you're watching, you're starting to see that the market is being volatile. And you probably can see that the data is starting to skip around. Okay. All right. So let's check the internals real quick. Trend is low. VIX pulling back. See, when the trend opens up lower, we have to look and see if the markets are moving higher or lower for that negative or positive divergence. If the trend is low, that just simply means there's more downticks, down volume than upticks, up volume on an NYSE stocks. Okay, they're selling off. Okay, so but the index futures are going up. Hmm. More like a squeeze on the shorts. Okay. Now, if the markets are indexes are dropping and the trend is low, then we're going to look for that demand and that potential turning point. Okay. If the trend is high, I'm sorry, if the trend is low and the markets are ascending, okay, we're going to look for that supply area. If the trend is high and the markets are dropping, we're going to look for demand areas. Okay. All right, we're approaching on a tick chart, little fair value gap area. Bank index also giving a heads up that things are down. I watched the bank index. These are 24 national regional banks. Okay, this also influences the Russell quite a bit because a lot of those big banks are in there in Russell 2000. Okay, follow the banks. If the banks are liquidating, then the cash market will start to reflect that. Okay. And again, just monitoring what NVIDIA and Apple are doing, two largest market cap weighted stocks. Now we do have contract rollover happening. So I am monitoring the U contract as well as the final days of the M contract or final hours of the M contract. So watch for volume to shift from the front month to the back month. That also may influence what we're seeing in the price charts here. So it's taking that out. Yeah. And let's come up over to the NASDAQ again. And we got that little. Now, if you're familiar with what a fair value gap is, if you're not, go out and study them. Okay. They have been really good places to look for where the market will test or retest that area. Yeah, it's kind of a brutal market right now, isn't it? All right. NQ. Okay, QQQ is getting a bounce, but not going much anywhere. Let's realign our stocks. Apple's centered, NVIDIA. You can tell that even though we had that sweeping move to the upside, what are traders really thinking right now? Okay. Do they want a short? Do they want a long? I need to come back up here. We got that reference point here. It's actually a bearish pattern. When you have that big drop, okay, you get the little fake out, breakout, and things like to roll over. Got to find a way to manage the trade though. This is going to be an aggressive entry, looking for price to move lower, and what time is it? We still got about 8 minutes. Let's just let things settle out just a little bit longer here. See, right now, what's going on the trading floor is the floor traders are waiting to hear from the guys upstairs. Okay. Guys upstairs handle the order flow, or sorry, the orders uh, that are sent in from the on the stocks that are sent in from the companies, whether the companies need to sell or buy. Okay, then those orders go to that investment banker. The investment banker sends the order to the floor. Floor traders process the orders. Okay. So between 8 a.m. and 11 a.m. Eastern is where we see most of that institutional order flow get complete. Okay. And we often see that with that institutional order flow, if price is going into a supply zone or a demand zone on the quarter hour, we often get a pretty strong reaction. That's why I look down to see what time it is. We've got about 7 more minutes, 6 more minutes before that first quarter hour comes into play. See, many of you that have been trading for long periods of time or even short periods of time, you have all this sensitivity, but you need to have a way to validate the information. Okay. Now, validating it comes with more documentation. Okay. Verifying the information. What you feel is great. Keep those feelings, but find a way that you can measure. So if you say, hey, this is a wait and see, or I'm thinking there's a gap fill, okay, well, then I need to wait and see. But based off of what? Okay. Well, based off of this activity, this, and this. In our pre-market routine, we go through several pieces of information. Okay. And, we talk about, you know, all the indexes were gapping outside the prior session's range, possibly a gap and run. We watched the US dollar, the 10 and the 2-year yield moving up and down, Dow 30 stocks trading on light volume. So a lot of things that I just reiterated here are things that we measure and document every day because they reveal how the market, um, we start seeing those correlations. Okay. Now, even though we're getting that move back up, okay, look at the volume. Okay. We got the matrix right here showing the total lack of volume. But in trading the NQ, you're also noticing that there's just a bunch of small odd lots trading. Okay, there's no size behind it. So who are you really trading with at this point? Bunch of novice traders. Okay. Now this particular price pattern does lead me to feel a little bit more bearish. Okay, but the entry for this particular price pattern has it at this point is a little tough to get in without a little some more commitment. The price pattern that I'm going to describe right here is that we see a strong drop and we start to see that price starts to make a base. Okay. And in some cases, we get the little fake out breakout, and then we get that strong move back down. Okay. So my hesitation to go long is I'm expecting an entry for this to play out. Okay. We use resistance and support as a way to kind of train our eyes for these particular price patterns. Okay. Here we have a resistance area, price popping out, just like the template showed. The big odds enhancer is this move into it. Okay. And also recognizing that where that low pivot point is and the structure below that resistance can also reveal whether we're going to have that move continue on up or whether we're going to have an abrupt corrective move. Okay. We do have one economic report coming out at 10 a.m. We're also expecting a 10 a.m. reversal. Okay. So as we're reaching that first quarter hour, we're still roughly about 18 minutes before that 10 o'clock reversal can come into play. Okay. Yeah. Watch and observe the spread. Okay. The spread between the bid and the ask, if it starts to widen, okay, you might start to see a lot more slippage. Okay. Now, of all these stocks that we're watching, the top 8 largest market cap weighted stocks, okay, I pay most attention to Apple and Nvidia since they are the largest market cap weighted stocks. Remember, with the NASDAQ, S&P, and Russell, the large market cap stocks influence the index over the small market cap stocks. Okay. We are right in the middle of that. I think right on the quarter hour. I'm leaning a little bit more to the bearish side. I'm not looking to put on a lot of size. Okay. I'll start off with just a couple of micros and we'll find places to add on. If this particular pattern plays out, there's going to be opportunities for me to add on to this position because this one is often in front of what we would call a V-shape reversal. Okay. On a larger time frame, this would be a drop-based drop. Apple's selling off. Okay. We haven't seen any follow through with Broadcom, Meta, or Alphabet. Okay. So I'm leaning a little bit more on the bearish side. I'm going to use this leg base group of candles as my protective stop loss. Okay. I'm just using that range right there to understand the risk involved. If I take the trade short, I'm going to look to short just below that 754 area. I'm going to stick with the small contract size.
Order filled.
My protective stop loss can be about that 787. I put it 788. My risk on the trade is 139 bucks. Always take a moment to understand the dollar amount of the risk you're getting in. Okay? Because if it was too big, then I would just, if it was outside of my trading plan, okay, I would just size it down to 1 micro. Okay? Now, this is the map that I'm anticipating to play out. Okay? And we're just at the start of it. That means there's a lot of risk involved here. Right? But we are anticipating to stop out where I'll lose 139 bucks. Or we'll look for our profit margin. First profit margin potential. Got another leg base right in that area. Now, as I'm waiting for price to go in my direction. Okay. I want to watch what the Qs are doing. Are the Qs being bullish or bearish right now? Are they moving lower? Okay. And to get a little insight of what the Qs may be setting up to do, we got to watch Apple, Broadcom, Nvidia, Meta, Tesla, Amazon, Google, Alphabet, excuse me, and Microsoft. Okay. The NASDAQ futures, large market cap stocks influence how the NASDAQ's going to move. So as we took risk on this trade to get in, I'm needing to see a little more help from the stocks. Okay. My stop is in place based on my trade plan. Okay. But in order to get commitment for the potential move down that I'm expecting, okay, I'm going to need some help from the stocks. So NVIDIA and Apple's helping out. Apple's kind of in that lead, but NVIDIA is kind of being quiet. Okay. Now, if you're not getting follow through on your stocks or the exchange traded fund, you can elect to step out of the trade early. Okay. Smaller loss, smaller profit, because we're not getting the commitment to that turn. Taking these things into consideration gives you a different level of knowing. Okay. We had a good potential that this was an area. The time also came into play. We decided to take the risk on the trade. Okay. Yeah, I use a white background because in education, and that's basically what we're doing, just kind of helping traders educate. Okay, is a white background. It tends to be keeping people in a learning state rather than a kind of an absorption state. I guess the black background can be difficult to read for many folks, especially when doing presentations. So, no, I appreciate all the comments and things like that. Yeah, but I've always been pretty comfortable using the white background because that most of my job is education and sharing this information with other participants. All right, we're about 10 minutes to the top of the hour. You can see that price is not turning. Check your emotions. Are you prepared to be stopped out and lose whatever your risk is? If you're starting to feel uncomfortable, okay, then that's your signal to step aside. Okay. Yeah, it looks like the stocks are, I'm just kind of watching here. I mean, we need another big red candle back down. That would give us that momentum push. Okay. If we start to see green candles on Broadcom, Meta, Nvidia, Amazon, Microsoft, then we potentially are going to see price continue to move up. Okay. So the moment you feel uncomfortable, you could take a small profit, you could get out, step aside until you learn these different things about the markets and their conditions. Okay. Yeah, it looks like we're going to hit our stop.
Order filled.
Yep. See, look, the stock started pushing up, showing green candles, which made it, and then the index followed. Okay. Now, this still may be a good level or area to go short. Okay. but we're not getting the support from the stocks or the Qs just yet. So I'll wait for my next little setup. I'm still feeling that bearish based on the price pattern. Okay. But it's just going to take a moment for it to finish up. Okay. S&P. Let's jump over to Russell. Yeah, it looks like the Dow and the Russell are giving much better potential moves. Yeah, it feels like, I mean, the volume right now on the NQ, the spread is sometimes 2 or 3 ticks wide. Okay. A lot of slippage going on. That behavior we just saw in the market depth, where you're watching price fluctuate like it is, and the spread is showing that there's a lack of banks and institutions involvement. You're trading with a bunch of scalpers and day traders at this point. Okay. Between 8 a.m. and 11 a.m., we need to find where the banks and institutions are hanging out because they're the ones that control these markets. And I really want that short. It is going to be elevated risk. Remember, in 6 minutes, we do have an economic report. Getting a little follow through here. I'm going to jump back in on this.
Order filled.
And let me get my, I'm going to, yeah, we've got 53. Watch the time. We got about 4 minutes. This is our first place, our first target, and it's first place we're looking for potentially some buyers to step in at the origin of this move. Okay. Yeah, we're not getting the follow through on the stocks. Need some help from the stocks. about 3 minutes away. Remember the sentiment number that's coming out at 10 a.m. is last month's number. It's not this month. Okay. And if you're looking at that Michigan consumer sentiment number, that means that there are a group of students at the University of Michigan that make about 500 calls, or make a lot more than that. They do a survey of people, and they produce that for the people that donate to the University of Michigan. I think it was back in the day, it was $4,650 a year. You could donate to the University of Michigan and get that number, the consumer sentiment number. You can get it 2 weeks in advance. All right, now we're 3 minutes away from that report. Be prepared that there might be some more volatility. Make sure you have a hard stop in place. If the price breaks above where our stop loss is, then we're going to go look to try to fill that gap area. We're not getting follow through on the stocks. Okay. Now the Qs are pulling back. But if we're not getting follow through on the stocks, then we have to anticipate that, you know, that this market is not going to continue to drop. Need help from Meta and Nvidia. Nvidia is holding pretty good considering. We do have Tesla helping. Oh, there it is. Come on, Meta, help us out. There comes Meta or Nvidia coming around the far outside. Broadcom, Meta need to join the party, but we are seeing a little uptick on Microsoft and Alphabet. Be prepared. Your whipsaw is coming in play. There it is. And the stocks are taking, yeah, it looks like Meta's coming back up. Here's your chance to get out, let your stop work or step aside. Okay. I'm still on the bearish mode of this, so I'm going to let my stop loss work. Are you guys finding the information helpful? I mean, we're associating our opinion of where we think the market is going to go. We're helping it with our risk. We're looking at information outside the price chart to help us support our trading decision. Okay. Things that we can measure, document, verify. Now, of course, you're not going to be able to verify and document it all in one sitting. Okay. The stocks didn't do too much. How about the exchange traded fund? You're up the Qs. So if the whipsaw made you feel uncomfortable and you have a clear sign right now that you weren't ready to get stopped out of the trade, okay? You have to embrace your stop loss. You have a couple of chances to get out at break even or let your stop loss work. The choice is yours, okay? But if you felt uncomfortable about that when the price started going against you, you may not be ready for the trade, okay? And that means you're becoming sensitive to the market environment that you're working with, okay? Trust that gut feeling. You can observe, you can put things together, okay? But the more that you learn to trust your gut feeling, okay, and when things are uncomfortable, just step aside, okay? We could take a small win on this. Now, if price does continue to go in the direction we intended for it, then fantastic. We got a lesson out of it, okay? Without the risk. Yeah, I'm not quite convinced yet that it's going anywhere. All right. Crude oil continues to make a nice move down. And looks like nat gas is building up that base. A little choppy, but I think I'm going to take a shot on that to break out. And a protective stop loss. Okay, so my intended is take a break above 3.564. My stop loss will come in there at 3.542. A lot of accumulation going on right here. Oh yeah. Um, as you're studying the markets and putting them together, okay. Again, I mentioned that the Elite Trader Funding, one of the prop firms we're working with, has given us some complimentary evals to pass out to students. Okay. If you would like one of those complimentary eval accounts to get started working with a prop firm, Elite Trader Funding, very helpful, very good. They got a really nice Discord room, some very experienced traders that are always watching the markets in there and supporting their students. Uh, Please let us know in the chat. Just say, I want that eval, and we'll give it to the first five. We got five of them. Is that right? Five or four? Gotta go back up and look at that. We got four codes to give away. Okay. So if you want it, type in the chat, I want it, and we'll give you the instructions on how to get that one so you can start your Elite Trader Funding prop account. The first one is an eval. Once you pass the evaluation, then you move on to a funded simulated account, which you get paid on. Okay. Thank you, team. All right, let's pop over to S&P. Oh, Meta Nvidia just not selling off. Tesla's starting to get an uptick. As much as I'm reluctant to, I'm thinking I'm going to look for another entry. Uh, it's just not working the way I want it to. Okay, and I'm getting some signals outside the price chart that the follow through is going to get a little more difficult. Okay, I'll give this about another 4 or 5 minutes, and if we're not showing a decent profit, then I'm going to step aside. My risk is still about $200 on the trade, but our NASDAQ index is not going to go anywhere unless the stocks move first. So we need to see some weakness on Meta, Amazon, oh, and Microsoft's now helping, Alphabet, mainly NVIDIA and Tesla. Hey, Andrew, with the evals, I don't think there's any fees for those. Okay. But once you do pass the evaluation, you will have some fees to go with that. Okay. They got to make money too. And you can also go out to the Elite Trader Funding webpage after you get your eval account, the coupon code, and they can also answer a lot of the detailed questions about that. Boy, back and forth, back and forth. Hey, Broadcom stepping up. Come on, NVIDIA, Meta. See, at least you know if you're short or versus long, you know who you're rooting for. Okay. We need help from the stocks in order for price to continue going down. Now, especially, I mean, Apple's doing fantastic job and Broadcom. Okay, but we need Nvidia to join in, Meta, and more importantly, Amazon and Tesla. So these are the ones that are kind of slowing the progress down. If you have the hinkling or the feeling to adjust your stop loss, okay, probably best just to step aside. Again, it's that gut feeling. Yeah, let me adjust my stop down. Well, why did you feel that way? And once you learn what that feeling, trust it, step aside, and then observe. Was that feeling warranted? Was there information outside the price chart that can support you? Okay. Come on, Meta, NVIDIA, we're waiting for you. Okay. Our first obstacle down here where we had some buyers before, we're going to anticipate that 87 out of 100 times you're going to get a one-to-one bounce off of that level. Okay. Not 100%. This is the price pattern we're expecting to play out. And here comes Meta coming around the far outside. And there goes Microsoft. Come on, Alphabet and Tesla. Oh, great. We all the giveaways have or the coupons have been there. So that's good news. All right. So as soon as we get Alphabet on board, and then if we start breaking the opening lows, momentum should start to come in. You now have a one-to-one trade. We were risking 200, we made 200. What is your trading plan? Are you a one-to-one trader? Are you looking to be trend trading? Are you looking for 2-to-1? Okay. This particular price structure is often seen in front of a V-shaped reversal. Okay. Now, using Fibonacci price extension lines, taking the last couple of moves, I'm going to take two of them, these two swings to the upside. What we want to do is measure up and then extend down. And we're going to look for the Fibonacci price extension 314, 2618, 224, 1618, and 127. Okay. And we're going to see if those match up with one of our demand zones. Okay. So I like to look for a confluence of those Fibonacci lines because then we have small and intermediate time frames overlapping. All right, so we're looking down this level. Got a strong confluence around here. All right, so once you have those outlined, just go ahead and remove them. We got enough lines on our charts. There's your one-to-one trade. Okay. So the area that I'm looking for, where we had confluence of Fibonacci lines and we have our demand zone lines down, is I'm looking for that profit target down a little bit further. Now, once price breaches 2-to-1, okay, I want to see right now on the stocks if we can take out the lows of the session. Looks like NVIDIA is really helping out now, okay? But we are expecting a small bounce, okay? This was that origin of the move up. We have our leg base group of candles. But this is the price pattern that I'm looking for, okay? My main target, 21,396. In order to get down to that level, we're going to still need to see some follow through on the stocks. See, I find it helpful when I'm in a trade and I'm getting influenced by the profit and loss on my, P&L, okay? Is I need to find something outside the price chart to tell me to stay in. If I got stopped out on my first couple of trades this morning, then I'm more inclined to take a small profit and miss out on the big run. Okay. So having things outside the price chart to help me stay with the trade, like what we're looking at on the stocks, we're watching the exchange traded fund. Okay. Because we're really close to the low of the session on the Qs. Okay. Price breaking that low on the Qs is going to cause a little bit of panic. Okay. Did you get some of that, Andrew? Nice job. So what would that perfect world scenario look like? Okay. And that's why we look at things outside the price chart to help us. We okay, Harvey? Looks like we lost Harvey. I'm gonna go ahead and record on mine. I'll pass it over to him. Oh, we got YouTube. Okay, no worries. All right, you're still at a 1-to-1 reward to risk ratio right now. And until we start seeing more aggressive follow through, I'm not willing to add on to my position just yet. Okay. In our classes and other live trading room scenarios, we have been studying a lot more at a fair value gap and using that fair value gap area as a way to adjust a stop loss. Now, I haven't moved my stop loss yet. I'm still looking at potential follow through on these stocks to the downside. Okay. So I've not using the fair value gap as a way to enter a trade, but as fair value gaps are created, it can be a place to adjust a stop loss. Okay. And watching for the ones that are getting violated, like this one just got taken out. That's a good sign. And then we have one right below it, right inside that area. So once we violate that one, there's nothing in the way to get till we get down lower. So as part of what we cover in teaching here is that we got to find where those obstacles are. Obstacles that often we see the price changes direction on. Okay. We have a leg base, which is, a buy zone. Okay. There may be some unfilled orders at that level. Okay. We're starting to see a little bit of a bounce. Not a lot though. Yeah, let's follow through with this. We've gotten if you want to take the profit, fantastic. Okay. If you feel like adjusting your stop, I'm going to adjust mine because I'm not getting that momentum follow through just yet. We're going to adjust it down to 21,725. I probably should have just taken it off and put it on instead of scrolling. So it's 725. We will be locking in a small profit. We've taken the risk off of our trade. Okay. Now we've got to get past this last little obstacle, which once we get past 21,648, okay, we won't have much in the way. How many guys and girls are still in the trade? Yep, we just came right into that area. Actually, we took it out. So let's remove that. We're still with 2 micros. People say you can't make money with micros. Is our plan still working out? The price structure that we talked about? Okay. Yep, we have an old support area 3 out of 4 times, you'll get a bounce off of support and resistance, or 78% of the time. And once price exceeds this, we'll adjust our stop loss down to the next level. So once price takes out that little support, the VWAP, okay? Once it takes out that support, then we'll adjust our stop loss to the 21,675. See, having a good understanding of like what statistics, if price is approaching a support area, what's the probabilities of a bounce? Well, 78% of the time, first time support or resistance is tested, you're going to get a bounce, not a trend change, but a bounce. Okay. Now, if however you prepare yourself for the bounce, okay, you can take a profit, not sit in the bounce, and then look to come back in on the other side. But at this point, we'd be taking additional risk. Okay. All right. Looks like Broadcom's helping out. Meta's doing good. Let's see if Meta gets a low. Yeah, we're still getting really close to breaking new lows on some of the stocks. And the Qs just broke that low. Okay, so we might start to see some acceleration. Okay. Once price takes out the 644 area, then I'll adjust my stop. Right now, I need to leave it alone. Or take the money and do the happy dance. S&P. Old resistance, new support. Okay. Still showing that the trend is low. We are still on the bottom side of the tick. Now, these are referring to the NYSE. Okay. The trend, the tick. Okay. We got advancing issues over declining issues. Everything's still a little more on the bearish side, but we're at that level where we should anticipate that there may be a bounce. Okay. Volatility index has started to move up. Maybe there's some more breaking news coming out. Yes, our schedule, maybe you guys can reply to that. Thank you, Harvey. Um, we have live trading rooms Monday, Wednesday, and Friday. And Tuesday and Thursday, we have a community trading room.
Order filled.
Okay. Did we get stopped out? Oh, we got our nat gas finally. All right, let's get our stop loss in place. Okay. YM still coming down. Bonds are dropping fast. That must mean the dollar is going back up. Oh, yeah. It's starting to get into that choppy range. See, the dollar's going inverse of what the 10 and the 2-year yield are doing. Okay. That's a heads up. Things are going to get a little bumpy right now. Okay. Finishing that comment, I like an active participating room. So we have what we call as a community room where everybody has mic privileges and can share their screens. And we just kind of hang out and trade. So if I'm not doing the community trading room, if I'm not doing the live trading room, then I'm hanging out in the Discord room to answer and help anybody that's interested to learn. And having a good community is really, really important. And a time where you can express what you feel and see on the chart, and also verify information. Come on, we need a big red candle down, but okay, Nvidia's helping, but Apple's getting a little bounce. We're about 3 minutes away from the bottom of the hour. How many of you got to participate in this little NASDAQ trade? Type in the chat with me if you, or for me, if you will. I'm not seeing the chat, so you guys let me know if we're doing it. Wow, nice job, Candlestick. Cut 2,300 bucks. Well, that makes a good Friday, doesn't it? You could pass the eval in a couple of sessions. Make sure you read all the rules. Some of them you don't want to exceed more than 50% of what you're supposed to make uh, to qualify in one session. So, yeah, we are live on YouTube every Friday. All right, starting to get a little help from NVIDIA selling off. We still need Alphabet and Amazon to take out Meta, taking out those lows. But NVIDIA is starting to accelerate. There's nothing really in the way as price comes down to the next leg base group of candles, a zone. We'll expect a bounce. This is where the buyers stepped in last night and started pushing price back up. Here comes Broadcom making a new low. NVIDIA pushing down. All right, no reason to get out of this yet. And we do have another. Kind of watch how these fair value gaps set up. If you have one set up and then it breaks the low, then you can add on to your position or adjust your stop loss. And those rules you want to refine based off of your trading plan and how you take profits on that. All right, Meta and Alphabet, we're waiting for you. We've got about one more minute. Oop, we don't even have 1 minute. I'm going to carry over just a few more minutes here just to watch this play out. I think we're going to get if we can break those lows, we'll get a little more push. But if we can, if you want to join us in our Discord room, I'll be hanging out over there in the voice channel with anybody that wants to hang out. And we'll kind of follow the rest of this trade in there. Okay. So I wish everybody a good Friday, continued learning, putting things together. If you want to know more about what we do at themarketinstitution.com, please come over or get our Discord. Can you put our Discord link in the YouTube as well? And yeah, our main logo is just traders helping traders. Okay, we all want the same thing, and from time to time, we all need a little influence of a different trading style. Okay. All right. I'm going to wrap up. It's been a great Friday. Thank you, team, for helping us out and putting everything together. We'll see you next week for those in a live stream, or we'll see you over in the Discord room to hang out for the rest of this trade. Have a great day, everybody. And oh, it is Father's Day coming up. Ooh. All right. Happy Friday, everybody.